see how the setups build on the charts. This is an example of the bullish setup. Okay. First of all, we have a rising move. Here's our rising move, a move up. Then we have a retracement, a move down. Okay, the move down now is required to at least touch the area of the two moving averages, touch the first one, or go inside it. Of course, that is also okay. There's nothing wrong with that. And then we need to see one of the three situations that we talked about. A green candle, or a bullish candle, or a close above the top of the area. And in this situation, we have all three. We have all three in this beautiful candle. First of all, the close is above the top of the area. Here's the top of the moving average area. The moving average area, of course, is the one between these two blue and red lines. So, do we see a close above the top of this area? Of course we do. The area is here, the top of the area is here, the close is here. Of course it's above. And do we see a green candle? Of course we see. And do we see a bullish candle? Of course we see, because this is what we call, with the two candles together, are creating what we call an engulfing pattern, when the second candle engulfs the whole body of the first candle in the opposite direction, moves in the opposite direction. So we have all three here, and that is why we have a setup. This is the trigger candle, the one that when closes we get in the market. And that's why I want to ask you, where do we get in here? Do we get here at the bottom of the trigger candle, the top of the trigger candle, the open, or the close of this candle? Okay, let me know in the comments. I want to hear your answers, guys. Where do you think, according to what I have explained about this strategy, where do we get in according to this strategy? On the bottom, top, open, close of this candle, which price do we get in? I will be answering that in a minute. I'll be waiting for your comments that I love so much, and after that I will be answering. Okay, before I answer, I want to tell you where is the stop and target area. The stop should be below the bottom. See, this is the bottom. This is the top of the moving average area. This is the bottom of the moving average area. That's why I draw this horizontal red line at the bottom, and the stop should be below the bottom. Okay, so I buy. I will be waiting for your answer to see where should we buy here. My stop should be in this area, and my limit should be, or target area should be, above the previous price top. This is the previous price top, this level, around 1.31. This is the pound, by the way, the pound dollar, the cable for our chart. And the top of the previous move was around 31. So my target area should be above 31. Anything here, I can look for other clues to see, okay, I need a limit above 31. Shall I place it at 31, 31.20? 31.50, where can I place it? Anywhere above 31 is solid according to this strategy, but I can use other technical factors to estimate where should I place it. 31, 31.20, 31.40, 31.60. The strategy does not specify that. It only specifies that the price is now, after this setup, is expected to trade above the previous top. Okay, and we got a winner. I think guys, I think we have another analyst on the chart, on the chat, because Ski10 is giving me very professional answers. I love that. I love that. You are, of course, you are right, man. On the close of the candle, or the close of the trigger candle, is where the strategy is telling us to buy. Once we see the close, it's a green candle, it's above the area of the moving averages, and it's a bullish candle pattern. All three reasons to buy at the close of this candle. So we buy here. The close of the candle is around 30.40. The minimum target should be above 31. Okay, so we have at least 60 pips of profit to collect here. You can place that 10, 20, 30 pips above 31, so that makes your profit 70, 80, 90 pips. In this case, the maximum profit that this strategy made was just pips below 120 pips. Yesterday, guys, I had two questions from two different people asking me about how to make 1,000 pips a month. Well, I am showing you how to make. For example, this setup in front of us has made around 115 pips in one trade, and in one candle. One candle. That's 4 hours, guys. You are making this kind of profit in 4 hours. Okay, the minimum that you have should made on this trade is from 30, 40 to above 31. To me, that's a minimum of 70 pips. So if you make 70 pips or more than that, you are following the strategy and you know how to use it. Okay, 10 trades like this a month, and that's your 1,000 pips. Okay. Okay, now let me show you how the bearish setup appears on the chart. Okay, this is the euro dollar, also for our chart. As you can see, 4 hour comes a lot in my examples. I love this chart. Of course, it's trade-off. When you use short time frames, you can get amazing setups on these time frames. Sometimes I use the 5-minute chart, the 15-minute chart. But the targets for these setups are not, of course, they are not as large as the setups for the hourly, 4 hour, and daily. So, of course, technical analysis works well on all time frames, but the difference is in the size of the target, the size of the stop. These things, of course, grow with the growth of the time frame. Small time frame, that means a small stop, small target. Longer time frame means larger stop and a larger target. Okay, so let's take a look at this. The price is dropping. It's attempting to recover. It attempted to reach the moving average here. It did not. So here we do nothing. You know why we are not doing anything after this recovery attempt? Because this recovery attempt did not touch any of the moving averages, either of the moving averages, or got inside the moving average area. So there is no setup at all here. But here, when we get in, now we are talking. First of all, we touch the area here, and we get in here. Do we sell here? No. Do we sell here? No. Do we sell here? No. Do we sell here? You know, you might, but I don't think so. No. Why am I saying no? Because we still do not have the conditions we need in order to initiate a short position. We need a red candle. There is no red candle here. We need a bearish candle. To me, you know, this could be a bearish candle because it has a relatively long upper shadow, but overall, you know, you might like to wait a little bit more. Do we have a close outside of the area after reaching inside it? Do we close outside it? No, 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 we do not. So first red candle appears here. This is the first red candle. So on the close of this candle, we can initiate a short position according to this strategy. Okay, the price does not move immediately in our favor. We see another green candle here, meaning that the price rose a little bit, and it rose even further here, touching the 49 simple moving average, but we still hold on to our position. Why is that? Can anybody tell me? Why, although we had a green candle here and we had a new high here, we did not close our short position? Why is that? Anybody on the chat? Okay, let me tell you and see if you got that right. We do not have any close or actually any trading above the top of the moving average area. Do we see anything above this red moving average? Nothing. So why should we close our position? There is absolutely no reason to close it. We close our position only if the price is trading above the SMA 49, and this means that this is our stop area. And of course, as I said, I prefer to wait if my risk management allows me to do so. If my position is not very risky, I would prefer to wait for a close above the top of the moving average area. As long as that does not happen, I hold on to my position. Okay, not very quickly. We saw here in the first example, we saw a very fast move. It took 4 hours to reach the limit of 100 pips. But here, no, the market is not moving for a while, and then we start moving in the right direction. Here we are still inside the area. Here we are still inside the area. We closed almost exactly at the bottom of the area, but here we have our first encouraging close, and that is a close below the area. So here is the trigger candle. If for any kind of reason you did not sell here and you want to sell here, this is a second trigger candle. Okay, it's not as good of a price as here, but still we closed below the bottom of the area, and that means a short position, just like in the slides we have seen before. So from here, after the second trigger, the market finally moves in our direction. This is the target area. Why is this the target area, guys? Anybody can tell me? I'm checking the comments. Who is the smart guy who is going to tell me, guy or girl, of course, is going to tell me, why is this our target area? It is our target area because it is below the bottom of the previous price move. This is the previous price move. This is the rising move that managed to get inside the moving average area. So the minimum target I would be expecting after shorting here around an 1160, 1150s, let's say, is to drop below 1100 or 11 the figure. So we have a minimum of 55 pips on this trade. This is the minimum, and of course you will place it like 10 pips, even if it's 10 pips below the previous price bottom, then it's 65 pips. Okay guys, so this is target area, this is your stop area, this is your trigger candle, this is a second trigger candle, and this is the move you are waiting for. Okay, does almost had it right, Michael? Why not have it right? Why almost? Huh? Tell me. Okay guys, let us, after seeing how the bullish setup and the bearish setup develop on the chart, let us look for let us take a look at more examples. And first of all, in the examples section, I want you to do some homework. Okay, test your skills, guys. Here's a chart. I do not have anything to say about this chart. I want to see what you have to say about it. Test your skills and tell me, can you see the setups? This is a Canadian dollar against the Japanese yen 4-hour chart. It is from last month, July. So let me know, do you see setups? And if you do, tell me how many setups do you see. I will be giving you a minute or two before answering this question myself, and I will let you know where to spot these setups. Okay, obviously, first of all, this is a bullish setup, so you need to remember the criteria for the bullish setup, and from there you can start looking for the conditions, what conditions are met and where are they met on the chart. And if you see that, then you, in my opinion at least, you have done your work for the day, you have learned something new, and you are a better trader than you were an hour ago. If you believe so, that would make my day. Of course, I always love to help people who love the market. If you love the market, I love you. This is my motto. No, if you love the market, I love you. If you want to learn everything about the market, I will not save any effort in helping you achieve what you want to do. So please take a look and let me know. I will give you just 1 minute and let me know where are the setups. Do you see any setups? And I will be answering the question. Ski is saying 2. That's good. That's very good. I think the second one, Ski, I don't want to say 3. There are 3 actually, but I think the second one comes in 2 parts. So you are right about that. 2. The first one is obviously this one. It is very obvious. We have our rising move, then the price starts retracing lower. We get inside this moving average area, and what do we have here? First candle we got in the area. There is no reason to buy here, of course. Red candle, close inside the area, not a bullish candle in any way. But here we have our first reason to buy. This is the first setup. We said, of course, we need either a green candle, a close above the top of the area, or a bullish candle. We have one condition here. Can you tell me which one is it? I think it's obvious. This is a green candle. It's not the bullish. It can be piercing. It can be a piercing pattern with this one, but it is piercing patterns are not very strong, to tell the truth. They are not engulfing patterns, for example, or hammers, or doogies. Sorry. So it's not doogies. It's doogie. So we have ourselves a green candle, and this is the first reason to go long. Okay. If you're still not sure, you might wait for the push above the top of the area and the close. The close here is maybe 5 pips above the top of the area, or maybe 3 pips even. So also here, if you are not convinced here, this is another reason to believe that the price is trying very hard to move higher. And here, boom, comes the move we are waiting for, and we are very happy making money. Let's see. The entry should be around 82.20, and the minimum target, of course, should be above this, the previous top of the previous price move, and this is the previous price move before the corrective move. The top is around 82.90, so buying at 82.20. The minimum target is above 82.90, for example 83, and from 20 to 83 the figure that is 80 pips of profit. And here we have reached our target. We have pushed a little bit above the minimum target, and then fluctuated up and down before giving up and falling inside to the area again. This is the first setup, and this is the second setup. The price here moved higher, then moved to the to inside this area. Here we have 2 setups in one, and this is a bit tricky. Where do we get in? Of course, we will talk about both of them and why you should get in. First of all, we dropped from 83.20. We got inside the moving average area, and we do not have a close below it. Do we have a close here? We traded for like maybe this is 3 pips, 5 pips below the bottom of the area, but no close. Here we traded a little bit more, maybe 10 pips below the bottom of the area, but still no close. If we have had a close, or any candle of these candles closing below the bottom of the area, we skip this. We just cancel the trade here. We do not get in the market. We just stay out of the market. But we do not. So we have what we need in order to treat this as a bullish setup. First of all, the price dropped to the bottom and then rose. What do we have here? We have a long lower shadow. We have a long lower shadow. This is bullish, of course. So at the close of this candle, this is our initial trigger candle. If for any kind of reason you are not following the market here, the market will give you another chance, and a better chance actually, to get in, because it goes back inside the area again, and this time we have what looks like a hammer, or a mixture between a hammer and a doogie, because the body is very, very close. It might as well be called a doogie. and we have a green candle. We have no close below the bottom, so this is the second trigger candle, and at a better price. Here we have maybe 82.95, the close of this candle. The close of this candle is around 82.75, 20 pips better entry point. If you are lucky, you would be in here, but if you got in here, you are following the strategy 100% correct. Your buying here is correct. Sorry about that. It is correct, and in both cases, the limit, of course, is to trade just above the 83.20. Here, there is something important I want to say, and that is that we do not control the size of target that this strategy is providing us with. It provides us with the target that can be related to that top that we have just seen. So if the previous top is very far, then we have a great target potential. If it's 70, 80, 90 pips away, then we can make 70, 80, 90 pips and a little bit more. But in this situation, the top is 83.20 and the initial trigger is at 82.95. That's only a 25 pips of profit potential. In this case, you might be thinking, should I get in or should I stay out? And this is, of course, this is completely up to you because your risk management can determine, can you get in and target 25 pips? Do you want that kind of target or not? It depends on your risk management, on your money management, but according to this strategy, yeah, we have a trigger, we have an entry point. Regardless of the size of the target, it's only 25 pips, it's okay. I want those 25 pips, and I usually go for small targets. To me, 25, 30, 35, that's good enough. I do not always look for 100 pips in the market because it's not easy to find 100 pips every day or every 2 days in the market. It's much easier to find setups where the target is 25 and 30. They are much more common on the charts. So if you look for small targets, you will be able to trade more, and if you are a good analyst, you will be able to make money on these trades and on these setups much more frequently than if you wait for huge targets, 100 or 150 pips. Okay, so don't be afraid to follow the strategy when the target is small, but keep in mind, you need to keep in mind that in this case, I should not be expecting 100 pips on this trade. Okay. Let me just compare this setup with this setup. Here I have a profit potential of at least 80 pips, and that is great. Here I do not have that kind of profit potential, but I want to get in. I need to keep that in mind. I need to keep in mind that the second setup is not the first setup. The first setup can give me 100 pips. The second is not expected to give me 100 pips. I will cash in my 25, 30 pips and get out of the market.